Hi, this is Randy Finney with the right side of the chart, and today is Monday, September 24th, 2018. This is a market wrap. It's actually the first market update I've done since Thursday. Members of the site, I had posted a video, market update analysis on gold and some of the other trade ideas that we're looking at right now, and mentioned I'd be leaving town Thursday through today, going down to the Keys for a little mini vacation. So as I suspected, I didn't have time to do any market updates. Didn't really see anything worth mentioning, anyways. I glanced the markets Friday night after we got back on the boat, and again on Monday or this morning. But there's really not a lot. Any new developments, but there are some levels to watch. So let's just pick back up where we started, where we left off last week, and I'll go over some of the key levels. And I wanted to just hit on some of the sectors of the S&P 500 as well today. So we'll do a brief market update on the Nasdaq 100, S&P 500, Russell 2000, and then look at a couple sectors and wrap this up. Keep this video relatively short. Okay, so this is the NQ 60 minute. These are the NASDAQ 100 E-mini futures. And what stands out to me is this level here. We're pretty much boxed in. This 74.37-ish has acted as a very good support in recent weeks here, going on pretty much all of September so far. So a lot of stick saves down at that level. Keep an eye on that 74.37. It's not a hard level, meaning not defined very well. So give or take, there's some punches through there on the 60-minute candles. You can see a few candlestick tails there, and we snap back above it. And on the top end of the range, really what I'm looking at is this 76.25-ish level. You can see that's pretty much capped. It was resistance here, a couple reactions, then support again. So if we look at the bigger picture, pretty much let's just box in that range. And this is a battleground right now. So again, when I say we haven't had a lot of new significant technical developments, there it is. We've traded sideways now since pretty much the beginning of the month here. Here's the start of the month down here. And that's that. So we just need to watch which levels to get taken out first. And with conviction, again, you might see little intraday pierces through there, but you want to see an impulsive break either way. You also have this trend line. This is that same trend line on QQQ and NQ that I've been focusing on for a while. A lot of reactions along the way. And if you recall my recent analysis, we had just a brief one-day breakout that failed. Other than that, NQ as well as QQQ continues to respect that trend line. So what we had here, when was this? On the 21st, simply a back test of that trend line. That was the last back test and another impulsive rejection. So there it is. And we can't take much more of this. These are little, micro levels. If we happen to pop above 76.25, next resistance it's minor too, at 76.68. But again, keep an eye on those levels. Let's look at QQQ for your QQQ traders. I also have, and I had mentioned, I believe last week before I left, this trend line here I was watching, and that's since been extended. So it looks like today we hit and bounced off that trend line right here. Let's zoom in a little bit for you. So that further validates that trend line that I had started tracking last week. Now we have quite a few reactions. Again, this is a QQQ 60-minute chart, if I don't make mentions right up here, hourly chart. So these are 60-minute candles, and you can see the same trend line here. It goes back. We'll jump back a little farther here in a second. There's that brief one-day breakout above the trend line and a failure. So basically, again, just like on NQ, QQQ also back tested and failed at that trend line today. And again, it goes back long enough with a lot of reactions to make it significant. Also, this 184.86 level I mentioned last week, what we had here, this line right here, starting from these highs down to this point, this little yellow line here, is Fibonacci retracement. So what I had done is measured the move down off the highs back in late August to that low. We failed there. That was the both price resistance at 184.86. Right there, you can see a couple reactions, as well as a 61.8 Fibonacci retracement of that move down, that initial move down. And looks like that's about where we failed again. We had a little bit of a pop intra-period, but you can see on several attempts right here, numerous attempts on the 60-minute chart, barring this one candle that happened to print a close above it, and then boom, right back down below it. You can see a lot of tags. So I'm watching that level, and again, that's you can box it in this way if you trade or prefer to chart QQQ. There's your trading range right there. So 184.86 down to about 180. Respect a impulsive break in either direction. This trend line continues to get back tested from above. You don't typically, I mean, I've seen back trend lines that were back tested very clearly, multiple back tests that go on for months. So that is a possibility, although you usually don't back test it for much longer than this. It's already been now, what, over 3 weeks? Well, no, yeah, about 2, 3 weeks here is where we begin to back test. So there it is. So again, I think if I had to have pick two numbers, two levels to watch, that would be at 184. Maybe we can call it to be safe now. We have a couple reactions above it. You want to be safe, call it 185.40 or so. And again, down to about 180 on the bottom. And based on everything else I see on the charts, well, let's go to the daily chart. We're on QQQ. Let's stick with that. Let's look at this one. I like this board. So this is the trend line that I've continued to really put the most significance on right now, at least near term. It's the trend line off the early April lows. Lots of reactions along the way. It's the same trend line I was just showing you there on the 60-minute as well, but this is how it looks on the daily chart. And again, you can see lots of candles respecting. If we look at the daily chart here, that breakout on the 60-minute, well, we closed just a hair above it. Again, not close enough to say that we clearly took it back and then we failed there. So same story. There's that also that minor uptrend line I showed you on the 60-minute chart. So those are additional levels to watch. And what I mean by that is, come back to the 60-minute chart here for a second. If we break this trend line now, that would probably be the catalyst to come down for one more test of 180. Or if you're bullish and you want to buy pullbacks, buy the dips, then that is support, as is this level's been sliced through. I'm going to remove that 182.64 line right now, if I can get that there. Yeah, so let's just watch that level. That would be your first support, with 180 as second support. And we've hit it a lot of times. And again, it's this bigger picture that keeps me bearish. That's the daily chart. That shows me the divergence. We had a divergent high back here early in the year. We also had one on that first correction on the 60-minute time frame. This is just a big divergent high, and I still favor a sizable correction coming up here soon. We just need the catalyst. It's like you almost have to hit the jukebox here. It's like the record's stuck. And what I mean by that, we need to see, as I'll get to in a second, and I've been harping on, well, you need to see the technology sector breakdown, and it continues to test its trend line, and that's what's been holding up QQQ and the rest of the market. But remember, QQQ is not the market. It's not even a very diversified index, top heavy. So we'll look at SPY here in a second. Before we do, again, bigger picture, weekly chart. Here's all the divergent highs over the past decade with all, double-digit corrections. Here's the most recent divergent high, and as I believe I mentioned last week, we now have what I call, at least in my book, or what I refer to it as, confirmed negative divergence, because we had, as you can see here, and I mentioned last week, a bearish crossover on the PPO. And we can even put up the PPO histogram. That's what shows the crossovers in a visual form. So last week, and that was official as of Friday, we had that cross. See the little red bar right there means we crossed down below the zero line on the histogram, which just means the two lines crossed on the PPO, the PPO line and the signal line. Now this week, and the week's not over. Keep that in mind. It's, all that matters really on a weekly chart is how you close on Friday, because this can change. This bar can and will change right now, but it's even larger. We even went deeper into red territory there. Why? Why is that? Today was the first trading day of the week. The Qs were up 1/10%. The reason for that is when you have a trend that is up, if you start to go sideways, the momentum is then shifted. So you have to continue to go up during an uptrend. So this was virtually a flat day, and so what that means is that faster moving average is coming down, bringing down the the lines here. And all I'm trying to say is right now we still have that. So far, this didn't prove to be a whipsaw signal, that bearish cross. No, that's not exactly a sell signal in itself, and it's not a sell signal, but it does, like I say, and I get this a lot. Randy, why do these divergences? The market keeps going up. Yes, divergences are not a sell signal. They are an indication of a trend change, but once you get that crossover and that divergence is confirmed, it's very likely that's when very, very shortly after, if the top isn't already in, and I believe so, that's usually the case. Once you get the crossover tends to come right after the top, of course, because you have to have some downside or at least sideways trading. So as of now, there's the Nasdaq 100 peaked at the week ending August 31st. These candles are below, but we're not going to get any type of waterfall sell-off or really anything much more to the downside until XLK breaks. Here's XLK on the weekly chart. Also looks primed to go, but you have this long-term uptrend line it needs to take out. And more importantly, for timing purposes, forget about the weekly charts right now, is this daily chart. There's that, I call it's a very comparable uptrend line to QQQ, although QQQ already broke its trend line. But you have XLK, you can see continuing to dance on that trend line. And as I mentioned before, during a healthy uptrend, you come and visit a trend line, you have a couple tags, and then off to the races again. But when you start to see prices hug that trend line, numerous tests, like tapping on something with a hammer, you keep tapping, sooner or later it's going to break, more than likely. Depends what you're tapping on, of course, and this has been a resilient trend line, but it's also the nature of a rising wedge. You see prices contracting with this upper trend line, which is really just our divergence line, shows a negative divergence, and prices are compressing. So if we do get a solid and impulsive breakdown, there goes tech, and that will most likely bring QQQ below that minor trend line and take it down. Now, also have said this, QQQ is not going anywhere without the broad market. You can call this another tech correction, or not even so much tech. It's also Amazon's contributing to this and some other things this time around. But here's SPY, and there's a trend line I'm watching. Let's see, I have a couple different boards. We'll look at, this one's fine. Same thing. This is a comparable uptrend line. It doesn't go back as far. Here's the one off the April low. So this is the trend line right here that QQQ and XLK tech is testing. SPY is well above that now, but SPY has this minor uptrend line right here and this wedge pattern, these two lines together. In fact, we'll do this so it's visually a little bit easier to see the wedge. We'll make this one yellow, and I think that will come into play. But this is what you need to see in order to get at least what I think a decent swing tradable sell signal in the market. Is that breakdown in XLK below that trend line I just showed you, SPY breaking down as well, and of course QQQ taking out now that minor trend line since it's there, and that's it. So again, we've been tapping on it. Yeah, the market just made, or at least the S&P 500 made a new high last week on Thursday, but so far it's given that back up. And again, it's the divergences, everything else taken in together that say we'll likely get a breakdown soon. But until we do, we can continue to move up like this. And like I said, anything's possible. We could certainly take out these divergences if we started to get a rally here. Some people speak of a blow off top in the markets before we're ever going to have a decent correction. I tend to think this was a blow off top back here, and sometimes you do go on to make a new high. So technically speaking, right, you're not going to say this was a blow off top. It didn't mark the top, but we're not much above it now. And either way, blow off top or not, let's forget about whatever can happen will happen, and let's watch for a breakdown, a sell signal here. Otherwise, this market continues to go higher, and again, it's just not a market that personally I chase. But again, and also if you're a YouTuber and that's all you do, you're not a member of the site, or or you haven't tried out the site, you know, the broad markets are a tiny fraction of what I trade personally, what the official trade ideas on the site. I focus on and believe in big time in asset allocation. So we have trades and currently actively on commodities, gold, bonds, individual stocks, sectors. Trade ideas are light now. That's because this market I'm not seeing many attractive setups. The market continues to go up, but I'm not a trend chaser. I don't buy something just because it's going up. I buy chart patterns, breakouts, pullbacks to support if it looks like that support level is going to hold. I don't buy pullbacks to support like this when it looks like that support's ready to crack and have a waterfall sell-off. So again, the markets will do what they're going to do. Trading opportunities, as long as that happens, we have this very low, steady grind up, not very powerful rise. Um, the trading opportunities are elsewhere, and we're going to get to that in just a second. At least go over some of the sectors. So there's SPY on the daily I just showed you. And finally, here's SPY, the S&P 500 tracking ETF on the weekly chart. This is the big trend line, the most significant or salient trend line that I could point out right now. It comes off the bull market lows back in March of 2009 right here. Numerous reactions along the way, and we had several weekly stick saves. And what I mean by that, a lot of reactions. You can see there was one there. We bounced off that trend line. We closed on that trend line. We bounced off it. That's why you have the skinny part, which is the candlestick shadow, or when it's down below, we call it a wick. I'm sorry, a tail. Wicks are on top when the shadow is on top. There's another body close on it after an intra-week break. Lots of reactions. Again, this was covered quite a bit back then. We're well above it now. So from a longer term perspective, bull market trend line, SPY needs to take that. But I'm looking at the divergence is about to be confirmed on the SPY. It's not yet, but if we continue much lower and we even come to that trend line, especially a break below it, you get a bearish crossover here. See, we don't have the bearish crossover on the weekly yet on the PPO. And so, like I said, we can continue to rise and eventually maybe take out the divergence. I don't see it happening. In fact, I would put probably less than a 10% chance of that happening. That means 90% or more that this divergence will be confirmed. We'll get a good correction, and at some point, and I think it'll be sooner than later, by the end of the year, quite likely, we'll come back and revisit those lows from earlier in the year. And that would be a pretty sharp move down, but that's the thing. Stocks tend to fall a lot faster than they rise. So when this trend line, if and when it breaks, that's what I expect, a pretty quick sell-off. All right, and finally, so large caps are QQQ and SPY large cap ETFs. We'll go to the other end of the spectrum, IWM. Let's just look at the daily chart on IWM. And this is it. It's a lot going on here. It's busy, and I'm not going to get into specific levels because this is now an official trade idea on right side of the chart. But I wanted to show you what I'm looking at, and I've covered this recently. I have two uptrend lines, as you note, and this yellow one is what I call the BOD, benefit of the doubt trend line. If I can draw two trend lines in close proximity, and they're both valid, I have a lot of reactions on both. I wait for the latter of the two to break, give it the benefit of the doubt. 169.70 also, you can just make out the numbers there. It's a horizontal support, so you basically see this. So you have trend line and uptrend line and price support here. Here's that horizontal line, the price line around 169.70, give or take. Lots of reactions there. That's IWM has been dancing on that level lately. Hasn't gone. It peaked back in small caps, peaked back in late August so far, and we're now just starting to crack below that uptrend line. And so again, I think small caps, everything looks poised for a nice correction. It's just like it needs a nudge. And now, unfortunately, we're going to have probably see a little extra volatility here. Where, as I talked about earlier, the S&P is doing the rebalancing a lot of sectors, and we're going to go through the sectors right now, as a matter of fact, and wrap this video up. Okay, in no particular order. These are still the for just if I remember right, just a few more days. I think it's later this week. That first big sector rebalancing. Talk about the sectors that comprise the S&P 500. So these are old. I haven't updated this in a couple months, and this is what's going to change the weighting in these sectors. And they're actually going to eliminate the telecom sector, have a new communication services sector, and a lot of stocks get moved around. So what does that mean? A lot of buying and selling as the ETFs and the mutual funds go to the new rebalancing here. Some of those have already started, and I imagine that'll continue through the week. So XLE, this is the energy sector ETF. I have a trend line here. Excuse me. Excuse some voices given out here. A long weekend. XLE, there's a downtrend line. Not very well defined. Take it for what it's worth. I don't have a strong opinion on XLE. XLK, as I mentioned, this is the one I'm watching. This is the biggest, by far, the biggest weighted, highest weighted sector in the S&P 500. I forget what the new numbers will be. I'm going to look that up soon, and I'll add that to my charts once everything's completed here. But there it is. There's that trend line I'm talking about. And that goes back to the early April lows right there, the white trend line. There's a wedge, and there's XLK just down, bounce, 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 bouncing on it. So far, you can buy the dips on it, but you're really not going anywhere. Right? It's really, and it doesn't mean it can't, but so far, these bounces have been very muted, very unimpulsive, not gone very far, and we keep coming back and hitting that trend line again. So we take it out, I think, then we come down here, probably get a reaction. This one's not very well defined, but it's a potential trend line. I think we get a reaction there. But like I said, if S&P 500 and QQQ revisits those lows back from um, earlier in the year, that's actually right here and here on XLK. It'll probably, I think tech will come all the way down and visit that or February low right there. That's what it was, the late January, early February lows. A couple lines right here. And again, that's the most important one. That will bring the market down with it if I'm correct on that. And if it doesn't break, then it's going to hold the market up with it. XLV, I'm not crazy about. I don't have a strong conviction. Here's a potential trend line. It's not very well defined. Little small divergence. Healthcare stocks are defensive issues, but they do make up. And again, I haven't updated this in a few months, but give or take, as of now, about 14% weighting. And there it is, just a minor trend line to watch. Again, my convictions aren't strong on that. I don't see anything to make me want to buy it, step in and buy it. This is something, and again, and also in healthcare, you have such diversification among the components as far as their business models go. The one healthcare company may have a completely different business model than another one. So you get that in some sectors. Other sectors, birds of a feather tend to flock together. There's telecom. Telecom will no longer be. This sector will be eliminated. And I think I read about this. Only I think 4 or 5 traditional telecom companies that are really even into telecom. Landlines are going away. It's all, now they're all mega. You have Comcast that owns Universal Studios, NBC, all that other stuff. AT&T, same thing. So telecoms are not just your old Ma Bell anymore. That's gone. So now that's why they were going to the new communication services. Sorry guys, tripping over my own tongue. Again, long weekend, not a lot of sleep. All right, that's it for telecom, XLY, consumer discretionary. This is a pretty big one. Amazon makes up the bulk of this, if I remember right from that article a couple weeks ago. Amazon is 25% of XLY, will be 1/3. Amazon alone, if I remember right, will account for about 33% of the new consumer discretionary once they do the rebalancing, the consumer discretionary sector. So pretty much you want to know where that sector is going, you just have to know where Amazon's going. But there it is, same story in all these rising wedges. That's why the charts and these key sectors, these are the important ones. Again, XL XTL, the telecom that I just showed you, it's such a small weighting, it has no bearing on, no matter what it does, it's not going to really have a big influence on the S&P 500, at least the old XLT, or the one that's in existence now. This one will. XLK, XLY, these two alone have, make up a big part of the S&P 500. So you watch these sectors if you want a cue as to where the market's going. Um, XLU utilities, the rate sensitive stocks are not doing well. Um, uh, Obviously, with rates going up. So here you have the divergent high right here. We had a breakdown and a back test. Boom, started to see some impulsive selling. It's coming up on support right here. I have support not far below, about 52.21. I expect a bounce there. Most likely, not anything I'm interested in buying. I'm not interested in buying these right now. And then I think just a couple more here. I want to get to let's talk on this one as well. XLF financials, again, about 14% last time I checked. We had this downtrend line right here. We had bullish divergence, and as I said, in a bull market, when you get a divergent low, that's usually a good buy signal. It was pointed out at the time too. Financials broke out, and they've been moving higher, but they're not ripping like you used to get these divergent lows during the bull market in this same bull market, and usually see a pretty powerful move. They're moving higher, but as you can see, they're just kind of muddling their way up after that since that breakout. And now we have some potential divergence here. It's not confirmed. The PPO is pointing up, but it looks like the financials could be running out of steam here. But I don't see a short entry, and I don't care to go long the financials if because of my views on the market. But again, individual stocks, I'll take a look if I see any that stand out. I haven't really gone through there recently. I think the regional banks were under pressure last week or so. I'll have to check that again. I just getting back to my desk here. So XLB, basic materials, that's only about a 3% weighting. I don't know what the new weighting will be. Here's a downtrend line. I'm sorry, an uptrend line to watch. We had a symmetrical type triangle pattern here. See this downtrend line. We broke out, ran into this previous reaction high right here, around 61.25, and pretty impulsive rejection so far. So it's coming back in to backtest that triangle. If you're bull on the basic materials, I can tell you it'd be pretty objective to buy a backtest of that trend line. It's coming right back to the apex of the triangle, and you can put a stop not too far below. I'd rather look at individual basic material stocks than XLB, to be honest with you, and try to sniff out the most bullish and avoid the most bearish, as far as for going long. XLP, Staples, there it is. This divergent. Here's another one of those divergent lows. This one was impulsive and explosive. This was pointed out at the time. I believe we even had this as an official trade idea off the divergent low, and nice move up in consumer staples. But that move looks to me to have pretty much run its course. Those divergences played out and then some. We had an uptrend line, this uptrend line right here. You had a small divergent high. I really can do it that way. So you had almost a price channel there. But if I put the line here, you can see negative, little small negative divergence at that high. And so far that played out as the catalyst for a breakdown in backtest. XLP backtested for looks like a couple months there, and pretty impulsive move today. And again, we can't write this off completely. I mean, we might be able to write some or even all of this off to repositioning within these ETFs, but the charts are what they are, and that's what you have to do. We don't know how the shakeout for all this sector rebalancing will affect these charts, but at some point you have to take things on face value. And to get a better cue, you can go in here and we can look at the individual components, some of the top components, but that's pretty bearish is what I'm trying to tell you. Breakdown, back test for several weeks there, and now an impulsive rejection move down off XLP. Industrials were roaring along recently. Big move down today, almost a 2% drop, and that's brought us to the subtrend line. So you need to watch that on XLI if you're long the industrials. We don't really have divergence at all. We don't. PPO's making higher highs, so is the RSI, but we do have a pending bearish cross on the PPO. RSI is rolling off on high levels, very overbought there. So we could get a breakdown here. Remember, not all trend reversals, tops and bottoms, have to be preceded by divergence. The divergence just helps to identify when those come, but there it is. So it's that trend line support. If you're a bull, you want to step in, buy it at that trend line and put a stop below. I wouldn't. I think this wedge type pattern looks ripe to break. And of course, if I'm right on the market, a lot of these sectors are going to go down with it. You get, if the markets break those key trend lines, most things will get sold along with it. And then finally, I'll wrap this up. XLRE, this is the real estate. This is the S&P 500's Standard & Poor's REIT ETF. I'm not going to go over specifics on here. We're short the REITs via SRS. We shorted actually 2 days. The REITs topped back on August 20th, right there at this point here, and we shorted August 22nd. So we're in 2 days off that. And I also mentioned on the site a couple of trade ideas, and they're playing out well. So you can see a big impulsive move down. And this one's playing out so far. And again, I can't go over targets right now on this or any of these ETFs, but I'll show you a couple of individual stocks. Okay, and here those are. This was 10 days ago in the trading room. We were already short the REITs, but then I mentioned some of the top. I just took a look at the top components, and you could see these charts were just ripe for a breakdown. Simon Property Group, that's, I believe, the second largest REIT now. It used to be the largest, it's a big mall operator. Just beautiful bearish rising wedge. And I'm showing these now because they're not actionable anymore. So, members of the site had this in the trading room. And SPG today, let's look at where that is. You can see these charts are playing out well. Big, nice, impulsive move down. And the other point is you get more bang for your buck shorting the individual stocks. If you go to any sector and sniff out the most bearish individual stocks and avoid the most bullish, if you're bearish on the sector like the REITs, then you can usually outperform. So there's SPG, just a couple more here. Let's see, there was also that's another one, WELL I mentioned. That one was just breaking down again. This is also 10 days ago, showed it coming down here to 61.30 for a trade up. And again, well, let's see here. We already took out the first support. We're halfway there. So, that one's already dropped a pretty good amount. It was down another 2.35% today, down over about 5-6% or so since the breakdown. And the last one, VTR, there's the projected path. This one was started already. This one was moving impulsively lower at the time. So 54.87 and then 61.10. That was VTR. VTR, and there it is. First target's already hit. Overshot it today. My guess is that's a momentum fueled overshoot. I'd still expect a reaction there. But again, the point being here is this confirms these are the leading. These are all up there. These are some of the larger REIT companies, and so you're seeing a sector, and you're seeing the utilities roll over. I just went over sector after sector. I can't make clearly bearish cases on all of them, but very few look bullish. The majority look bearish. And again, you'll just have to see the big ones crack, like technology, and then some of those trend lines. But the markets are still sitting, in my opinion, in a very precarious situation. I think when it cracks, it's going to go quick. There's a lot of pent-up energy in these wedges. Yeah, that's my opinion. So those are the levels to watch. Until then, if you want to be safe, we don't have any confirmed sell signals across the board on the market. We're seeing certain sectors, even the QQQs crack, IWM right there right now, but we need SPY and technology and some of those other things to go. So. That's it, guys. We'll wrap it up here. Gosh, that video was a lot longer than I thought it would be, but I hope you enjoyed it, and I'll follow up tomorrow. Any members of the site, I will get back to you on questions either tonight or by tomorrow morning, and updates will continue as normal tomorrow. Thank you, and have a great night.